up, guys? It's Cal Crypto. Welcome back to the channel. Today we've got some crazy news. Bitcoin's price looks like it's absolutely about to break out of a crazy pattern, which could lead to levels that we will talk about in the Bitcoin and Ethereum analysis, as we always do. But we also have some news on Bitcoin and Ethereum today. So let's dive into it. Bitcoin's price. As we look here, we see we have a very, very interesting pattern forming. We have a legacy trend that has been going on for a long time that extends back down to about 29,000. I don't know if you guys can see it, but it extends all the way back down to here that we have now turned into support. So at the worst case scenario, I could see Bitcoin going down to maybe 50,000, 51,000. But the crazy part is, guys, is we're forming this cup and handle pattern, which is a big, almost bowl looking type pattern with a tiny little handle right here. And if this handle basically breaks and confirms above this line, we could be looking for a move that could get us all the way up to $71,000. Now, this isn't financial advice, but let me just say, guys, Bitcoin is looking extremely bullish right now. It's awesome. It's great to see. If you're a bag holder, congratulations. If you're thinking about buying, maybe wait to see if Bitcoin breaks above its all-time high. Usually when Bitcoin breaks above an all-time high, it tends to go higher. So you can wait for that confirmation to buy, or you can just dollar cost average in and not have to worry about any of that. For the Ethereum price, we'll see Ethereum's actually forming the exact same thing. It's a massive bull right here. And we have almost like a bull flag forming down. So a bull flag, guys, is just simply when the channel starts to get tighter and tighter, and eventually it breaks to the upside. When it actually forms that descending channel, the chances of it breaking up are higher than if it was forming an ascending channel when it usually breaks lower. So be on the lookout there for Ethereum. But with the Ethereum news we have today, be wary. We'll actually dive into that first. So we obviously talked about EIP 1559. Great for the developers, great for the community, great for the fees, great for the traders, great for any sort of decentralized application using the Ethereum blockchain. Well, miners aren't so excited about that. Why? Because they make less money. So the mining pools, so if you guys aren't familiar with miners, right? Miners are people who hold nodes, so individual networks all over the globe. And some of these miners are centralized in a certain location, and that's who they are. That's what the company is. But some of these mining companies are pools. So they're pools. So they pool together people from all over the planet and use their hash power to try and solve blocks and create more rewards and get more Ethereum and Bitcoin. And the more people they have, it's like an army all over the world, but they're all working for the same goal, because if they work together, they can beat out, the next guy. And if you guys don't know who F2 Pool is, they're an extremely infamous group that have been behind some large Bitcoin selling pressure, and they're under accusations of a lot of things, including manipulating the price and selling a bunch of Bitcoin and shorting it on the way down. I don't know how likely this is, guys. I mean, F2 Pool is a pool, so they're decentralized. They're all over the planet. It'd be really hard to get them all together on the same narrative. But contradicting myself here, that is exactly what the Ethereum miners are trying to do. So the Ethereum miners are actually trying to band together to do a 51% attack. If you guys aren't familiar with what a 51% attack means, it means that when all the little nodes and all the people and all the miners are consolidating their hash power to power transactions in the network and confirming transactions and all that good stuff. The reason why crypto is great is because it's decentralized, meaning that no one can control the network. However, if miners were to pool together, then they would essentially be able to control the network and how the blockchain works. This could lead to double spending. This could lead to incorrect confirmation of transactions, the public ledger being ruined. So it's dangerous because that's not the point. It's supposed to be decentralized for that very reason. So one person or one entity can't make a bad decision that affects the whole community. So almost as like a protest, these Ethereum miners are coming together to trying to show that they can band together 51% of the hash power of the Ethereum network. So it shows here that 8 Ethereum mining pools amount to about 30% of the network's hash power, and they have cast their support behind a tiny mining pool, Flex Pool, which is just a company, it's a mining pool. Their stance against the EIP 1559. Of course, miners are going to oppose this. They make less money, and there's a thing in here in the article that basically shows that these miners, most of them just want cash. They don't care about the network. They don't care about the users. They don't care about the decentralized applications or the future of this stuff. They just want to make money. And it's sad because most of these miners are actually shown not to even use the Ethereum network. And to me, it just doesn't make sense. Why would you mine something and stand for something? But money is money, and people sometimes make clouded judgments based on what they can make and how much money there is out there. And so it shows we have the larger Ethereum mining pools react. Only time will tell if bigger mining pools react to the collusion campaign sparked by Flexpool. The 3 largest mining pools, BitFly, F2 Pool, and Spark Pool, are either anti-EIP 1559 or neutral. So that means like they're on either side. Some of them are like, we don't really care. Ethereum mining's going away in 2023 anyway because they're going to become proof of stake. And then, some of them are like, well, we want to make as much money as we can before Ethereum mining goes away. So you have it's torn right now. But this will be very interesting because they basically said they want to do this on April 1st. Granted, April 1st, I know April Fools could totally be a joke, but I think that they're serious, guys. I think this is something that they really care about, and they want to make a stance. They want to make their voices heard, and they want to show, hey, we can get 51% of the hash power. So if you're an Ethereum holder like me, I'm not that worried about it. This could just be some FUD that's going to fly away with like everything else, but just something to bring up, guys. Really interesting to see in a decentralized world of people all over the planet coming together to try and make, almost like a virtual protest. It's very interesting. Let's roll into the Bitcoin news now. Bitcoin tops 1 trillion in value again as the cryptocurrency price jumps again. Yeah, guys, we were talking about Bitcoin reaching its all-time highs after it broke 51,000. We're currently $1,200 away. So pretty close. And people always think, Bitcoin's gonna die. And it's proven that that's just not the stance. It's too established. There's too much there. And this just goes into saying how, the market cap of Bitcoin has surpassed 1 trillion again. It actually did that around 54,000. It's the second time that it's done this. It did it, went to 58,000, dropped to 43,000. Now we're back. It just shows that basically this is a thing, like if you don't think Bitcoin has the chance to become a multi-trillion-dollar asset, think again. The digital currency is up over 80% this year and 570% higher over the last 12 months. So Bitcoin's rally has been attributed to participation from larger institutional investors, notable purchases from corporations. Yeah, guys, I know there was this rumor going around about Oracle buying. Apparently on the earnings call, it wasn't confirmed. So, yeah, people thought that was a little bit of a bummer, but I'm not bummed that we're at 57,000 again. In other words, will Bitcoin crash not below 48K? This is just a Yahoo Finance article saying that there's a lot of people, when we talked about in our very first video, that Bitcoin moves in cycles. Just like last cycle, the bottom of the bear market was 3,000. They're essentially saying that this is now 48,000. So if we were to follow the same cycles that we have, we would basically see a $48,000 bottom after it goes to 500, 400,000. We don't even know if these cycles are going to continue, guys, but that's just what crypto quant and all these people and these analysts are saying. But you can't analyze something that's changing dynamics every day, in my opinion. I believe in cycles, but I don't believe this cycle is going to be the same. I believe that it's different this time. Yeah, I know, every Bitcoiner ever, but I really do think it is. We talked about this, guys. JP Morgan exposure to basket stocks that hold Bitcoin could be a gateway drug for clients. This just goes over about how JP Morgan released that document exposing them to cryptocurrency. This shows right here that JP Morgan is now going to offer a basket of tech stocks that have Bitcoin on their balance sheet. So in an indirect way, you're investing in stocks that hold Bitcoin, so you have exposure to Bitcoin. Could just buy Bitcoin, or we could just get a Bitcoin ETF in the United States, which will happen this year, guys. Yeah, this just basically says that MicroStrategy, Square, Riot Blockchain, just you can buy these stocks and now you have exposure to Bitcoin because these people have Bitcoin on their balance sheet. So it's almost like a way for people in traditional finance to dip their toes in a familiar asset that makes them comfortable. But then they're like, oh, but I'm still invested in Bitcoin. Yeah, you are. Because if Bitcoin were to go to zero tomorrow, MicroStrategy would not be in a good spot, or Square or Tesla, but it's not. Now, with all the Bitcoin news out of the way, Ethereum news out of the way, let's talk about our final thing, the $1.9 trillion stimulus. This, guys, is extremely alarming for the American economy. As you can see here, I have a graph from the Federal Reserve Bank of St. Louis on the M2 money supply. And if you guys aren't familiar what the M1 money supply is, it is essentially cash, checkings account. It is very liquid cash. It is like cash and fiat that can be spent very quickly. The M2 money supply is essentially the same. It is just also considering assets that can be converted into liquid cash or fiat very quickly. So as you can see from the 1960s, we have been going up in money supply. Okay, why is this bad? Because as there's more and more and more of a supply, its value goes down, 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 unless the demand can reach a point to where it makes sense. But the US dollar is just being replicated out of thin air. And the US population, US demand and consumption isn't changing fast enough to essentially keep up with this rapid money printing. So what you have is this money supply going up and up and up and up and up. Now here's the interesting part, Corona, right? Fed's balance sheet went to the highest it's ever been in history. It zoomed up here like parabolic. Like if we look here, it is parabolic. It just goes like this, straight up. And this has not accounted for the recent $1.9 trillion. So guys, when people talk about bubbles, Bitcoin's a bubble, the stock market's a bubble, this is a bubble. This is the definition of a bubble. And when it pops, it's going to be awful. People don't understand how bad 2008 was. Like this is on another level. Like 2008, the combined amount of money for bailouts was, I think, $500 billion. We've already printed, I mean, the Fed balance sheet has over, I want to say 9 trillion now. That's 18 times more than the amount used in 2008. So yeah, to me, that blows my mind, but we will see where this all goes. I just thought this was interesting when it ended up into the video with this fact. This is why we need cryptocurrency. This is why we need a finite money supply. This is why we need decentralization in finance. But guys, with all that being said, you know, consider this, do your own research, look into this stuff. It's really, really interesting. And when you kind of start to peel away the layers, you start to see a bigger picture on how, if you're not familiar with how fractional banking works or how our economics work, I suggest you learn, because this is something that most people just don't understand. And it's not like they're dumb or they're stupid. It's just, you don't look into it because the system keeps ticking. But when you actually look into this, and not to sound like a conspiracist, but this is just how economics work. And when you see the economics, start to be unbalanced and look very scary from a fundamental standpoint, you have to start questioning. And that's what I did. That's what got me to make this channel, to spread this information. So if you guys think this was interesting, leave a like. Let me know what you want to see in the next video. If not, I will see you guys on the next one. And as always, guys, Cal Crypto is out.